Thank you, Andrew, and thank you for inviting us along to be able to participate again with doing the Business Advantage CEO 100 survey for PNG. It's always good to sort of be there, sort of like going through the data and having a look at what things say, trying to reflect on what it means and where we've been, and also trying to dive into a little bit of what it's suggesting how things might unfold going forward. Um, for that, I might set a little bit of, first of all, do a little bit of a frame setting around the sort of the global scenario where some of the risks are lying at the moment. Move forward to some of the key results of the survey, and then dive in a little bit more to sort of look at some of those key results and what they may mean. Overall, it's an interesting survey, really sort of highlighting these sort of shifts that we've come out of a strong COVID period, the COVID disruption periods, and how they were really impacting on the growth, how things have shifted and how businesses are now moving away from adjusting to that COVID period to thinking more about what's going forward and the uncertainties that they do face. If you're thinking about the sort of global environment, the first slide in the pack that we've got there is really looking at the disruptions we've been experiencing of late and what it means for overall shipping and transport and supply costs. In that slide, there is two charts side by side. The first one's just really capturing shipping rates, which is like the Baltic dry rate, which is a nice summary of what it costs to hire a ship. And the second one is container freight rates, which is actually the cost of containers. And you'll notice two things have really happened here divergent. First of all, as we went through the COVID period, both of these spiked up really quickly and savagely, especially coming out of the recovery period when demand globally for imports surged. And this is a really important thing to remember about what's been happening in China, as well as the global recovery happened coming out of the US, increased demand for imports, and all this trade just exploded around the world. That led to a big surge in shipping costs through the Baltic Dry, and also a big surge in the container freight rates. Now, what happened was all around the ports in the world, which were running at very, very tight margins before this event occurred, all of a sudden were being overstretched. And the whole system really went through a period of disruption. What we've seen post is as the world's restabilized around this new sort of global trade situation, and then seeing the global trade actually ease back a little bit, shipping rates have fallen back high levels compared to history, but back to more sort of normal highs rather than the extreme highs we saw before, where prices basically trebled. However, container rates have remained elevated, and they're remaining elevated because of this disruption. There's enough ships in the world, but there's not enough space in the ports and not enough containers in the port world, and also ships are being barreled up around the world with seeing these new Omicron outbreaks that we're seeing through China and other parts of the world, which are causing these disruptions and meaning containers aren't where they're supposed to be, ships are not where they're supposed to be, even though they're still being hired. And so this has created this real disruption around container rates. And while they're off their peaks, they still remain elevated and being sometimes 4 to 5 times higher than what they were pre-COVID periods. So this is really giving an indication of these stresses are remaining there. And speaking to people in the industries, they're really telling us that while the shipping side is coming back to a new form of equilibrium, what we're seeing with containers is nowhere near that. And actually the whole distribution network through the freight rates, the lack of people to be able to move containers around within country, due to the lack of drivers and disruptions with the domestic supply networks, is all causing these bottlenecks. And that's due to a long period of underinvestment and a shortage of labour, something that can't be resolved very shortly. So whereas in the past what you see is a surge in investment to take up this slack and resulting in a big collapse in prices very quickly, quite often to where they were before, we're not getting that. And the second chart on the right is just highlighting that a little bit further. You've got our trade indicator, which just shows the big collapse during the COVID period, and then the big recovery out of it, and seeing trade activity now back around its more normal levels we're seeing pre-COVID. And you saw the disruptions index, just the global supply disruption index, spike during the COVID period when trade collapsed. That's unusual. Normally when trade collapses, disruptions are collapsing too because there's less demand going on. But this time you can see the disruptions were causing the trade collapse. And then then they improved as the recovery coming through. And then they spiked again as the recovery was coming through so strongly and these disruptions were still there. And then they actually spiked higher than they were during the COVID period and now pulled back roughly to where they were during the COVID period. So you can see here now that we're in a slightly different framework. So one of the key messages we should all keep in mind when we're thinking about prices, getting supplies, doing things that we need to do over the next couple of years is, even if you sort of parked to one side what's going on in Ukraine, parked aside what's going on with the global trade environment, where we're seeing a lot more localization and to some degree deglobalization of our supply networks, the supply chains are still remaining fairly disrupted in the short run, and that's really going to create these stresses points. So, Andrew, when we're thinking through these charts and thinking about going forward and the risk to inflation and things you may need and infrastructure within inside of PNG, this is a global issue and one that is not going to be resolved very quickly, and it's going to be having impact on local businesses within PNG themselves. Now, the next slide is just really highlighting my 4 key points from the survey. And it's really just in a nutshell bringing down to 4 key issues. One is that the profits last year were better than expected. So businesses did come through it in a much stronger condition. But however, expectations, and even though expectations for this year's profits are improving, they are still below average, which is disappointing when you think you're coming out of a recovery period. You've had this hit from COVID. Normally you'd expect a surge back in recovery and you expect to fill some of those holes in. Businesses are saying that, yes, things are going to be better, but still not as good as what we've seen pre-COVID period. And so then it's interesting to go through some of those reasons why. And when you sort of look down a bit further and look at the investment, profit, and recruitment together in a mix, you'll find that, yes, they've lifted back up from where they were during the COVID period, but still well off their pre-COVID levels. So clearly businesses have got this degree of uncertainty around where they may think next. Now, this moderation in expectations is really suggesting us we need to be so cautious about thinking the growth rebound that we're going to get. And that's the point 3 of it, that we not necessarily get the strong rebound. What is also interesting is the 4th point is when looking at the constraints around businesses, security, law and order has now come back and is being seen as a bigger constraint around businesses. And around with government administration, government policies, these issues have increasing to the fore as the problems with COVID decrease. Foreign exchange still remains a significant issue, one that's being assisted with the fact that growth isn't as strong as we thought it would be, and so the demand for foreign exchange is not as high. However, said that, it still remains an issue out there for businesses. So this whole gamut of government policies and decisions being made locally are becoming significant issues. So the global environment, to one extent, is there and unknown. What's becoming uncertain is there's what's happening domestically, and that's becoming a more of an issue. Now, the next couple of charts are all built around net balances, and so it's the idea of just trying to compare expectations against reality and trying to think about where they are. And it's really the expectations of those who are expecting a better outcome, less those expecting a worse outcome. Now, on that, you're looking at the next chart we've got up there. We'll be looking at the business advantage profits charts. And that's the discussion we had on point 1, just really highlighting that, yes, profits last year exceeded expectations and they were much better than what people thought they'd be coming through, which is definitely a good symbol. However, expectations this year weren't building on that. They're actually still below average. Yes, of course, now again, they can be beaten again, and that's probably what we're all hoping for and probably to some degree expecting. But it is showing that businesses, while they've seen this recovery come through, are being quite conservative. Now, this then gets reflected in the next chart, which is just building on that story of highlighting these expectations around recruitment, investment, and profits have lifted off their lows, but they're all net balancing around 60, which is really quite modest to where we were pre-COVID. So we saw the big COVID hit, particularly when it came to investment. And particularly for foreign investment, we're seeing this very modest recovery. And that is really telling you that there's some other factors that are in the backdrop of this that are holding back businesses. Yes, global environment's clearly going to be one of them, but the business surveys, as we'll see in a minute, is telling us there's other, perhaps more domestic factors that are building on this. Now, you put all this together and you can create an index overall of expectations, and you can chart it against general growth. And that's what the next chart does. It tries to compare this expectation index, which is the average of those 3 indexes of recruitment, investment, and profits, and seeing how it compares to economic activity. And you see it really has been giving us a reasonable feed over the last few years about what's been happening in the non-mining sector. It does give us a feel for what's happening in the overall mining reported numbers, but it's really that non-mining, non-resources sector that's giving us the growth feed up, linking up with the survey. And it did sort of highlight that last year was going to be a pretty bad year for growth. We actually got a negative growth profile coming through. In 2020. It was then highlighting that last year in 21 we would get a bounce and a recovery, and it was pointing towards being a modest one. And in the end, it actually came in. Or original estimates are actually pointing towards perhaps a better outcome than the survey was suggesting. And then looking forward, it's suggesting we should get some build on that. But again, it's suggesting that the current forecast is suggesting just a modest increase on last year probably is about right. So businesses are sort of matching together with what the official family, whether it's the Bank PNG or whether it's the World Bank or the Asian Development Bank, are thinking about the momentum in growth. And really, that shouldn't be surprising, because it's how these forecasts are done. They're done with a lot of interaction with local businesses and trying to build up from a bottom-up view as well as a top-down macro view. So the fact that these surveys are coming together is it's kind of a little bit sort of comforting that we're getting some good guides on which way things can head. Now, in terms of the degree of constraints we're getting around it, the next chart is breaking down to some of the key business constraints. In this one, I've dropped out the COVID one because we know it was a big constraint in 2020 and less so in 21. And really now it's a disappearing constraint. What we're moving forward to is how we live with this and what's going on in terms of domestic policies. And one of the clear standout ones is you still see that foreign exchange is remaining a key issue. That is a little bit higher than other ones. But what's coming up high, and as the second most highest, is security, law and order. So you can see these domestic issues about how you manage your local society and community can have some real impacts on how an economy operates. And so these policy decisions are becoming more and more important as these shocks, external shocks or heterogeneous shocks, they're the ones that are outside your control, such as a disease outbreak is really becoming more important. And the second one is just what continues to rise is this lack of government capacity. Yes, not as big as constraint as last year when government capacity was critical for trying to manage the shocks you're facing. But given the fact that we're in a growth period, the fact that businesses are still seeing this lack of government capacity remaining a constraint in business clearly shows there's more work to be done there. And of course, when it comes through the bottom end, reliabilities around utilities and telecommunications are also still significant. But what's clearly coming through this message is what needs to be done to help society, the PNG society and community and economy grow, is giving sort of increasing prominence to how the government manages its domestic policies and how it manages these key issues around security, government capacity, and government investment in the local communities. So these issues have drifted from being not as critical to being, again, quite critical to how you keep the economy developing and growing forward. And as things keep on developing around this trap, these issues will remain at the fore. Factors that are less concern but are starting to grow in concern, one of them that sort of stands out as being an ongoing issue. It's not as critical as the others, but it's the most critical of the least critical issues, is a shortage of skills and expertise. Now, this is one where you'd be hoping over time you'd see continuing improvements where it would drop down the list and become less of an issue. Clearly, at this point in time, this underinvestment in human capital, this underinvestment in the people in PNG is remaining an issue, and that's going to be a constraint on development. So the lack of domestic skills and expertise remains a significant constraint around what's happening in terms of the development of the PNG economy. The other one that sort of continues to stand out and has actually been deteriorating is logistics. And I've talked about how this is actually a global phenomenon, but that lack of logistics internally within an economy is always critical. So it's not only about bringing materials to PNG, but how you then distribute them internally. And of course, how you then distribute products that you produce that you want to export. And you can't grow an economy unless you've got the logistics in place to be able to smoothly export and distribute the products that you produce or services you produce. And at the bottom, which has been relatively stable, is both the inflation risks and, of course, the issues around high employment costs. I'm kind of a little bit interested that the inflation risks has still been quite mute there in PNG. I think this might be a sleeper that we see rising. Globally, it does feel like we're moving. While I'm very cognizant that we are not moving, and we don't see direct repeats of history, and we're not moving back into a 70s environment of pure stagflation, that is, high rates of inflation and low rates or negative rates of growth. What we're moving to is from a low inflation environment to a higher inflation environment, probably associated with lower rates of global growth. So as Mark Twain once said, history, maybe history never repeats, but it sure does rhyme. We've sort of got some lessons in there to think about how we're moving forward. And I think this idea of rising inflationary pressures, particularly around food and energy, is one that we can't escape from. And it seems at the moment that businesses in PNG, when the survey was done in February, this was sort of a little bit of a back burner issue. I wouldn't be surprised if we did the survey now, it's a rising issue. And when we do the survey again next February, it'll show this being a much more critical issue as these price pressures, given all these supply disruptions globally, continue to move forward.